All right, everyone, so we're going to continue here with Chapter 8, Setup 3, half dollar and whole dollar breakouts. And this is it's kind of a supplemental strategy. When we have stocks that are strong, often it's around half dollars and whole dollars that we see sort of the really exciting fireworks kind of action where it breaks a half dollar, then rips up to the next whole dollar. Then it breaks that level, and then it rips all the way up to the next whole dollar. When stocks are going parabolic, they're skipping half dollars and whole dollars. They're skipping the areas that are typically resistance. They're just surging through them. But half dollars and whole dollars still present opportunities for trades around those levels. So the half dollar, whole dollar entry by itself, I will occasionally trade. And we'll see some examples, of course, in this chapter. But usually, I mean, if I'm going to trade just an entry based on a half dollar or a whole dollar, it's because that stock meets all of my criteria for being worth trading. So the case of SCKT today being just ridiculously strong, there were a ton of possible entries on this around half dollars and whole dollars. You know, I mean, if we just kind of marked out every half dollar, I'll just do, so 34, 35. Right there you can see tapped 35 to the penny, that's high a day. And then we've got 33 right here. So a little bit of resistance, it taps it, pulls back, rips through it. Then we've got 32. We've got 31, we've got 32.50, which I'll just kind of put in the middle there. Drag that down just a little bit. So, you know, around there. But we could go back earlier. Look at how this squeezed right here up to 31.50. Then it pulls back off that level. Right there up to 30, pulls back. We can go down here up to 29. It surged through that level without much of a problem. Back here, it hits 26. Let's see, back in some of these areas, like right there, there's 24. Here's 24.60. That surges right through 25. So what you're going to notice on a lot of these stocks is at half dollars and whole dollars, it is not uncommon to see it tap that level and pull back and then give a breakout through that area. So let's just move this over here for now. So let me read this for you, and I'll go split screen. So I'm going to read it for you, and then you on the PDF can, of course, save it. So the entry at a half dollar or a whole dollar. Sometimes, oftentimes, I will buy a little early, like at $4.90, anticipating the breakthrough the next level, $5. This is a setup I am much more likely to trade in a hot market. In a cold market, we'll often see a break of half and whole dollars and then an instant rejection, false breakout. The market's not hot enough. Traders are not short sellers are not going to be as quick to cover as it breaks a half dollar, knowing how many times we've seen them break and then come back below it. Long traders are not going to be as confident to buy a half dollar break. And so we just see sort of this general subdued price action at some of those critical levels during a cold market. So that becomes a bull trap and a short entry, a short setup for short sellers. We'll talk about that in the momentum chapter specific to short selling momentum, where we look for those false breakouts to go short with a stop at the high. So there's a lot of people that will trade that approach to the short side. And so, you know, in a hot market, I certainly will look for entries at half dollars and whole dollars, but in a cold market, I'm going to be a little bit more cautious. Typically, we look for a quick break of that half dollar, whole dollar level, and then an immediate 5 to 15 cent break above that level. 5 to 15 cents in the case of stocks that are like under $10. When we start getting into the teens, you know, 12, 13, 14, 15, 16, up into the 20s, the 40s, the 50s, or in the case of SCKT, up in the 30s. Now, when we get half dollar, whole dollar breaks, we're more expecting 25 cents to 50 cents, basically jumping from 32 to 32.50, from 32.50 right to 33. And sometimes they're so strong, they'll blow right through up to the next half dollar. But we'll often sort of see at those half dollars a little bit of hesitation. When a stock really goes into kind of this short squeeze mode, it's going to start skipping those levels as short sellers are panicking just to unwind a position that's gone against them, and it's just going higher and higher and higher. And likewise, when a stock is in sort of a free fall mode where it's flushing, typically we would look for half dollars and whole dollars as possible places for bounces. But when it's really panic selling and people are just bailing out, it's just going to keep going lower and lower. So if we immediately hit a big seller on the level 2, usually I'll just sell in the bid and bail out, especially if I'm in really close to that half dollar, whole dollar. So an entry might be anywhere from 85 cents to 95 cents, approaching the next whole dollar, and then adding at 96, 97, 98, 99 for the breakout. It's not uncommon to see a big seller right there at the whole dollar, and then we're going to be doing that countdown. So 30,000 shares, 28, 27, 26, 25, 24, 23, 22, 21, 20, 18, 15, 13, 12, 10, and then all of a sudden it rips through and we get in for that breakout. However, sometimes it hits that level, it goes 20, 30,000, down to 20, and then it drops back down to the 80s. And then usually in that scenario, I'm going to try to hold for the second approach. Sometimes the first time it doesn't break, sometimes the second time it doesn't break, but if it keeps accumulating its head, or accumulating those sell orders there and hitting its head on that level, then I expect that it's kind of only a matter of time before it bursts. Again, that's more in a hot market than in a cold market. So typically it's critical for pretty much instant break from the whole dollar, at least up to the next dime. So from 3 to 3.10, or from $30 to $30.10. Although in that higher price range, maybe even to 30.20 or 30.30 would be better. And then if we do see some type of big seller, a big seller on the level 2 at just over the $0.50, or a hidden seller and it's just not working, then we're going to say, you know what, I got to just jump right out, break out or bail out. Now you can do a quick breakout trade and then get back in. In from 95, out at 305, add back at 307, sell at 315. If it holds that level, it can always add back. I do that a lot. And what we will sometimes notice is that as it breaks, it'll then dip back down to the previous breakout. So the breakout was the whole dollar. It surges through that, comes back down to it. That's a dip entry long. Stop now is just below the whole dollar at like $2.99, and then curling off that level for the add through 310. With a dip entry after the break at, say, 305, the target's usually then more like 315 to 325. And if 325 breaks, then we're looking at a move to the next $0.50, 350 in this example. On a parabolic stock, this works much better because the moves are faster. On a higher float stock or a large cap stock, or a stock with lower relative volume or in a cold market, $0.50 and whole dollar entries really don't work very well at all. And I just simply won't trade them. A bull flag, an ABCD pattern in a colder market can still work well. Can still work well on large cap stocks. I've traded them on Tesla and Netflix. They work better on, certainly stocks that are really within our focus for having the potential to go 20 to 30% in one day. But they work on other stocks. But the $0.50 whole dollar breakout is really specific to hot market and a stock really moving fast. And I do find the setup works a little bit better as the price gets higher because the breakouts through those levels start to get bigger and bigger. So now our stop loss, it's important to keep stops tight on this. Often the first winner is small. If you're getting in at $2.95 and you're selling at $3.05, it's only 10 cents. So you can't hold it back down to $2.50 if it doesn't immediately break. You kind of have to keep a tight stop on it. So on higher price stocks, if I'm getting in at $31.99 on SCKT, I may set my stop at $31.50 or even $31 because the spreads are bigger, and just realistically at that price range, I know that there's more room. I almost never want to be holding a stock down more than $1 a share against me. If I'm down more than $1 a share, my entry was not timed right. And maybe I had the right idea, but it was just not a good entry. Unfortunately, on those higher price stocks, they can flash down so fast. You can be down $1 a share just like that. But on the lower price stocks, usually the range is tighter. And so if we're in at $2.99, usually setting a stop down to $2.75, kind of at the lowest, I wouldn't really want to go below that. If we're getting down into the 60s, we're really pulling quite a ways off that whole dollar. Holding down to 50 cents, $2.50, it would give a poor risk reward ratio. So this has to be pretty much breakout or bailout. So if I'm in at 95 and it doesn't go right away, getting back out at 89 is fine. And I can always get back in as long as the losses are small and I haven't hit my max loss. So I'll put this back up on main screen just for those of you that want to take some notes, and I'll put my video up here. So the target, as we already discussed, is a quick surge through the whole dollar and then possibly up to the next quarter or $0.50 or whole dollar, depending on the scenario. The risk factors is that this strategy doesn't work in a slow market. It's funny because what works in a hot market just does not always work in a cold market. And you're kind of scratching your head because you're like, this is the same exact setup. Stock is surging up. I'm buying for the break of the $0.50. Why is this not working? It's confusing. But it's just the market sentiment is a very big component to this setup. So in a strong market where FOMO is strong, we have that FOMO, MOMO, right? All those traders that are jumping in stock, squeezing, short sellers really cautious or getting squeezed out. That's when we're going to have better follow through. This strategy absolutely requires watching level 2 and time and sales closely. A 5-minute ABCD pattern, not as much. Kind of any 5-minute pattern, not as much. Bull flag, flat top breakout, not as much. Yes, watching level 2 will help you to see whether or not there's a big seller on the ask or something like that. But for this setup, you really need to be watching level 2 because these are the ones that are going to be super quick. And these work really well on parabolic stocks. And you'll see me at times where I'm trading these where I'm buying for the break of the half dollar. And the next thing you know, it surges right up to the next whole dollar. It dips down, comes up to that level again. I add for the break of the whole dollar and it rips right up to the next half dollar. Dips down again for a second. I add for the break of the half dollar, rips up to the next whole dollar. And now we're talking about 50-cent breakouts every couple of seconds as it just continues higher, hitting its head on that psychological resistance, pulling back for a moment, and then micro pullback, which we're going to talk about in the next setup 4, and then continuation higher. So there are more examples in the parabolic setup section because this works so well in parabolic stocks. So chapter 8, just for reference, is broken up into specific patterns, and then we talk about specific stock types. So a parabolic stock is a stock type. A recent reverse split or an IPO is a stock type. So we talk about those specific stock types because when you apply sort of the best stock patterns to stocks experiencing one of those sort of conditions like recent IPO breakout or reverse split, that's when you sometimes get this perfect storm. So we're going to have a lot more examples in the parabolic setup section of half dollars and whole dollars because that's where they so often appear. But let's just go through this here. So this is a half dollar break. It's a micro pullback on the 1-minute chart. And the entry right here, see, half dollar right there. That's the entry. So can you guys see that? It squeezes up here and it's hitting our high day momentum scanner, of course. So it's hitting our scanner, it's surging up. We've got 25 million share flow. It's moving up. This is from years ago now, but it's going higher. And anyways, it taps 450. It pulls back, and then as it curls, immediately surges through 450 and rips to 460. Then up to 470, 480, and up to 5. What does it do around 5? It breaks 5, goes up to about 510. Then it pulls back, dips down, and as it surges back through that level, where would we potentially be long? So if it has already broken through 5, the first entry would have been possibly along at like 97, 98 for the break of 5, and then selling at 505, 508. Now, it broke through it. Now it comes back below it. As it comes back up for the second attempt, while I could get back in at 498, 497, or add right at 5, and while sometimes I will, the safer entry is usually to wait for it to break through the high a day because that's where short sellers are going to cover. Now, again, if this is really strong, we may be okay with getting in underneath the half dollar or the whole dollar, but it already broke once. And in fact, in this case, came back down. So getting back in the same level doesn't have the same strength usually the second time around. So that's where I would usually kind of wait for it to break the high or perhaps take an early entry at 505, 507, 508 for the break of 510. But let's see if it can clear back over 5 because what sometimes happens on these is that it breaks 5, goes to 510, drops back down, and then when it comes back up to 5, what's up on the ask? Big seller. Big seller on the ask, someone who's like, I'm going to short into this pop, my stop is at the high. So that's where I look at the high is really the confirmation. In this case, we squeezed up to 530 and rip up to 6 and then pull back a little bit at this area. This is another one here where, this hit the high day momentum scanner at $1.85. So it hits at $1.85. I pull up the chart. I pull up the level 2. I see it's just squeezed from $1.40. The logical place to buy here is $1.98. Yes, it's surging up, but if it can break that psychological level and it can hold above it, then my new stop is basically $1.99. So I could get in at $1.95, 96, 97, 98, adding into the break of that level. Initially, my stop is probably going to be about 10 cents because the low of the last candle is down here at like 75. So I could set stop all the way at 75, but I probably wouldn't even set it that far. I'd probably be saying I'm getting right in here, 95, 98 for the break of 2. Stop is 10 cents down, especially on a cheaper stock like this. More expensive stock, maybe we'd give it a little more room. But on this one, I'm in looking for immediate resolution. It rips up here. It does a micro kind of pullback here. It looks like it flashes down right back up. That could have been a market order sell. It would have been probably in an instant. and then continues higher up to 45. Another micro pullback right here, which is about the $0.50, 250. Taps it, pulls back, surges through it, goes up, gets to 3, pulls back, does that break of 310, hits 320, and then reverses off that level. And so our stop at that point of 299, having added for the break of the whole dollar, would have definitely made sense. So would have been totally fine with trading this long at 2, possible trade over 250, possible trade even up here at 3, as it taps that level, pulls back, and then gives a trade to 308. You know, this is a 1-minute chart. It's a fast-moving stock, but this is the exact type where sometimes the only entry is jumping in as it's squeezing at $0.50 and whole dollars. This is one that we've seen a couple of times, but just a good reminder of that resistance here. So it opens low on the gap. It squeezes up to 15, taps it once, kind of twice, pulls back, and then right here as it starts to surge up, all of a sudden breaks through 15 and goes all the way to 1680. So that was a very nice, clean setup, whole dollar break, micro pullback. This is another example of a stock, OPTT, where this one went from $2, it surges up and just kind of starts ripping. So when it first hit our scanner down here at like 250, probably the first good entry would have been the break of $3. So long at maybe, 285, if it was really kind of ripping, adding at 295, adding at 299, break of 3, it rips through 3. Maybe I take a little off the table at 308, or maybe in this case, because it just rips like right to 320, 330, I'm just like, hey, whoa, let's just hold on, and away we go. And off it goes into a halt up here at 4. Maybe I even add a little at 350. Man, this thing is just ripping. When they're ripping really fast like that, they're going to catch a lot of people's interest. And so that's where FOMO kicks in, and I'll start adding higher and higher and higher. In this case, this stock went from $2 to 680. I mean, this is a 400% squeeze just about. It was under $2 here. So this thing rips up, and realistically, your only entries in this area from 2 to 5 were adding, in my opinion, on micro pullbacks, and the logical places would have been $2.50, $3, $3.50, $4, into the halt, opens higher, does a dip and then rip, up to 5, whole dollar resistance, pulls back, first 1-minute candle to make a new high right here, new stop is at the low, rips up here through 5, the whole dollar, goes up a little higher to 548, 545, pulls back, new entry right here for the break of the $0.50, pulls back, goes a little higher, dips down. Now at this point, the new entry might have just been waiting for a break through the high a day. High a day breakout is another setup that we'll talk about in Chapter 8. So that's a little extended, but that might have just been the place where, well, if you're short, that's probably where someone would cover. And if you're long and you got a case of FOMO, that might be where you just say, you know what, I'm just jumping in, this thing's going higher. So jumping in there, little pullback, pops up, pull back, and then opens up and moves a little higher. Okay. So entry at 5 for a quick rip to 6. Okay, so on this one here, we have this kind of interesting setup where the stock squeezes from 360 to 380 to 4. Looks like it halts. Then it opens higher and surges up, halts again, opens higher, halts coming down. Dips down a little bit, pops up to 5, resistance there, and pulls back. Could you have taken this trade right here for the first 1-minute candle to make a new high? Yes, but would you have? Probably not. I probably wouldn't have because of high volume. The halts down, I don't know, it just doesn't really look, but it's a possible dip trade. It's even below the volume weight average price though. So anyways, it hits 5, it drops down to 428, curls back up, gets back above the volume weight average price here, and then the logical pivot on this one is 5. If it can break 5, now we're looking at a move back to the high. It halts going up at 5, it opens high and squeezes to 640 before halting coming back down. So not a picture perfect pattern, but certainly the $0.50 whole dollar entries, logical places to be watching it. This one, kind of interesting here, late in the afternoon. It's kind of choppy all day long, but holding the volume weight average price. Yeah, breaking and then flushing, but coming back up. And kind of right into the close, it surges up to 4. And then let's get my magnifying glass here. So on this one, what happened was we broke through 4 right there. We hit a high of looks like about 410, and then it does a micro pullback. So it tops here, then pulls back, and then rips higher. So let me turn this back off. So we get that squeeze up to 4, breaks through it, dips down. Now the break over 410 creates the long. It surges right through 450, up to 5, over 5. After hours, it continues a little bit higher. We often notice that stocks that are really strong into the close will continue after hours. The second the closing bell rings at 4 o'clock, all of a sudden, a lot of these market makers and smart routes come offline. And all of the stop orders and profit target orders that people have, they come offline. And so all of a sudden, a stock that even might have been thinly traded after hours and usually pre-market is a lot thinner than during regular trading hours. And so when they close strong, we can see that continuation of a squeeze after hours, which is a little funny because it's different from what we have pre-market. Pre-market will sometimes have stocks that are really strong pre-market, and they do continue into the open, but they continue into the open in spite of the bell ringing and all these orders coming in. The volume increases, and at the open, it just surges. But at the close, the high volume into the squeeze, and then I think part of it is that if you were trapped short into the close, and now all of a sudden, the market's closing, it closed at the highs, and now after hours, there's not as much liquidity. So if you want to be unwinding that position, now it's harder to do it. And then all of a sudden, it can start to ramp up really fast. And that's actually what we saw on one of the days on GameStop. This is a little bit of a tangent, but again, just for the heck of it. So, we go back on GameStop. This was a couple weeks ago now. So this is one of the days that I did pretty well on it. We're going to have to go way, way, way back. So before the drop, when it was still in the front side of the move, which peaked right about here at 500. So we'll go back here. So look at this day, for instance. This day, it was strong. It was strong into the close, and obviously the high of day was like $150, and it broke 150, and it went straight to 160, 170. A little pullback here on the 1 minute micro pullback, and then it goes up 70 to 75 to 80, all the way up to 93. Pulls back. This is kind of a sloppy ABCD pattern. As you can see right here, a dip, a pop up, right to here, then another little dip, and then it breaks through that level. It goes all the way up to $240, $250. So what was interesting was that this was a far bigger move than we saw during regular trading hours. And in fact, that is fairly common that pre-market you will see potentially like this bigger moves than you would see during regular trading hours, just because of the sort of liquidity in the market. But usually there isn't a tremendous amount of volume pre-market and after hours, so it doesn't really matter. But, as was the case with GME, people were still watching it, still trading it, and obviously there were some short sellers that were getting just destroyed on it as it just kept going higher and higher and higher. So, the biggest moves generally were actually pre-market and then after hours. I don't remember this day if it continued. It did dip, and then pre-market there from 380 up to 500. I mean, look at that. That's a huge move. So when you have a stock that is really, really strong, obviously we look at them, full screen. Obviously we look at them, pre-market on their gap and go scanner. I'm not usually trading still at the end of the day. Occasionally I am when we have something like GameStop that's just going crazy. As I said yesterday, I think it was, anyways, as I said in one of our last classes, decision fatigue can start to play a role in, your trading at a certain time of the day. And so afternoon trading, if you've been trading all morning, things can get a little messy, but definitely worth noting there. So anyways, that was a little bit of a tangent, but just because I noticed that continuation after hours. So here's another one where we definitely had, you can see resistance here at 4, comes back up, couldn't break through it pre-market. Now, you have a nice 1 minute, 1 minute pullback right there. So, nice trade up to that level. The bell rings, it pops up, sells off. Comes back up here. Now we've got a little bit of a double top right here at 380. It pulls back off the volume weighted average price, and it surges up here through 4 and higher. So this setup for me, the long, would have actually been a break through the high of day, but then very mindful of this level on the pre-market chart, that if we could break through that level, that would be really bullish. And it did break through 4 and went all the way up to like 438. Here's another example from pre-market, or bit of resistance around 550, not quite, but close enough. The bell rings, it curls up, it breaks through it, it dips back below it, comes back up, and again here, since it had already broken through it once and failed, the entry really is a break over the high of 560, but possibly getting in a little early, either at 555 or maybe even a little bit lower, just to see whether or not it can't surge through that level. And again, they're not always strong enough that they do that, but sometimes they do. All right, so APVO, here we go. 950, so half dollar, whole dollar. All right, so 950 breaks, false breakout at the open, choppy. And this case, a bit extended coming into the open. All right, so then we get this sell-off. Then it curls back, breaks over the volume weight average price, pulls back, surges up into a halt as it breaks through the new highs. Again, this level of 950, it's in play here, 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 and then here. And notice what happens right here. On this attempt, it breaks through it, it comes back down, and it holds above it as it surges back through that level. So what we often see is these critical levels of support and resistance. When they can break above it, they often come back down and retest it. But if they can hold above that level, then that previous resistance level becomes the new support for the next leg up. And this is an example of a false breakout. So here we have the topping tail, then the reversal. So it breaks that whole dollar of 40, surges up, and then immediately reverses. And then that ends up being a broken 5-minute pattern because of the topping tail, right? So we have to be mindful when we're taking these trades that if they start to go the wrong way, it can break the 5-minute chart. And then the 5-minute chart it's a broken pattern. It's no good. So now we certainly wouldn't be interested in it. Bull traps at the half dollar. So here, this broke over the half dollar by just a couple cents and then came back below it. It looks like it did it again right through here. And it looks like it broke right through here. So it kept This is a stock that for whatever reason, we don't really know why, for whatever reason, it was willing to break these levels. The dotted white line is the half dollar, and this is the whole dollar up here. So it's breaking the levels and then unable to hold above it. Very choppy. Breaking this level of 20, unable to hold above it. So on the 1-minute chart, you can see these false breakouts. It just keeps doing it. And sometimes that can be because, you have someone that's trying to unwind a large position that's been holding the stock for, months or years or whatever the case is. And they're just constantly, taking shares out. Sometimes we think that it could be if the company is selling shares on the open market through a direct offering, that selling is having an impact on trading, which can be the case, is not always, is generally not the case, but could be. So, some stocks are just for whatever reason a little choppier. And this was one of them. This is another one that was doing bull traps around the half dollar. So whole dollar right through here. So false breakout. So when we're getting that type of action, that's when we say, all right, you know what? This is a stock that I can't really trust these half dollar, whole dollar trades on. It's just too risky for me. So now let's look at a couple of examples here. So let me get my other window up here. All right, so we're going to watch this. Okay, so, all right, I can already tell you looking at this stock, GBR, and I'll move my video here, and I'll just cover my, other video here. I'll just go like that. So I can already tell you looking at this stock that we've got a seller here at 95 and another one at $4. We've already got some sellers stacked up. It just hit the high day Momo scanner. The float is only 2 million shares, but obviously we've got an issue here. So there's 95. However, this is a former Momo stock. It's up 25%. And because it's a former Momo stock, you may see it gets a little extra juice because traders jump on it. They get excited. Oh, this is GBR. Look at this daily chart. This is the stock that just went from $1.70 to $8. Now it's starting to curl back up. What's the next level we're watching? 410. But let's just back that up for the break of the half dollar. Okay, so possible entry could have been long right here as you saw that seller coming down at 395. That's a possible entry. Another possible entry is right here at 4. Or even at 98 or 99. All that green on the tape is telling us clearly there's some buyers. Yes, we do have a 13,000 share seller here. So there we go. But already, very quickly, it's breaking. So I add right there, 7,500 shares at 4. There's 405. The right thing to do is to take half off the table, and I do at 407. Half out, another half out there at 408, a little bit more right here. So this is going to be, let's see, I'm up 0 on the stock right now. So I'm going to take this trade and make about $500. Watching long right here for the break of 4. breaks the level, take that 5-10 cents off the table. Now, this was a gapping stock. This was probably one of our leading gappers. It was up 27%. So, you know, it was certainly one that it made sense to be watching. And this is a $400 or $500 winner. Now, if it holds this, if it immediately rejects and goes back to, you know, $3.95, that's not good. But if it can hold this level, then the new ad could be possibly over $4.08 for the break of $4.10 and continuation higher. So not a home run, but a nice base hit, valid on a stock like that, which is a little bit stronger and a former runner. So now we've got this one here. So this is going to be ACRS, a false breakout bull trap. All right, let's see what we've got. So false breakout bull trap on ACRS. So ACRS is right down here. Just get oriented. All right, so what do we got here? So you can see how we have this ascending support right here. This looks like it's the first 1 minute candle to make a new high. The 5 minute is a little funny with this red high volume topping tail candle to start the day. First 5 minute candle to make a new high is like right about there, which looks like I'm going to take a trade to anticipate that break with a long, I think around 14.50. So here we go. This is also worth noting, easy to borrow. Sometimes stocks that are easy to borrow can be a little choppier at first until you have short sellers that are trapped. 45, 48. There's 50 on the ask, 23,000 shares between EdgeX and ARCA. And buying volume, boom, boom. Look at that, bad fill. So that was a bad fill on my hotkey. I'm in at 66. Look at that. So I'm in at 66. I'm in where some people would be taking half off the table. It looks like on this one, I press shift 1. Or, well, my buy order is at 15, but it looks like I press shift 1. Filled at the top, 66. Well, in this case, now I'm in high and I'm like, all right, well, let's see if I can, all right, I guess it worked. Oh my goodness. Look at that. I guess it worked, I guess it didn't. So what you have there is now someone's got a big sell order. It's a limit order at 14.38. Let's watch that again. Okay, so here's 14.50. It breaks. So I'm in at 66. And on this one, I just decide to say, all right, you know what? Let's go for it. Let's get the break of 15. So I'm in at 83. I add for the break of 15. And just like that, look at this big sell order going through. There's a big sell order going through right now, down to there. So you know what happened is someone just did a 120, 150,000 share sell order, and the limit price of their order was 14.38. So they filled a good chunk of it as it dropped down because they were hitting the bid, essentially. Their order was a marketable limit order at 14.38. But now it's brought the stock right down to that price. So now we have a 14.38, and we don't know, I guess, if it's a short seller or someone selling a new position or an existing position, but that's what's happened. And so just like that, I'm down $6,000. Now, oftentimes when that happens, and we'll see traders are going to buy this up, and then a quick pop back higher. So, you know, that person got their big order filled, but look at that. Look at that. I'm out at 13.48. So that was a really nasty trade. This, on the 5 minute chart, this thing is ruined. False breakout, terrible 1 minute. I mean, it's not good. And you know, sometimes I look back at a stock like this and I as I rewatch it, I'm thinking to myself, okay, the entry right there, 14.50, and then sell half here. So I was buying where I should have been selling. Then it pops up, where's the next ad? 75. Long right there, sell. Now I should have been selling right as it broke through that level of 15, but I was too slow. I ended up adding really high. So right here, it's looking fine. 15.05, 15.10. I have an order to buy at 15.12. And then all of a sudden, here it goes. There's the sell orders going through 14.89, 14.87. And that's a huge chunk of sell orders going through right there. And there's that seller at 14.38. People buy it up for a second, but then it just goes lower. And, you know, and that's on this one, that's a $15,000 loss. and it's like instantaneous. And so that's where, you know, it can be kind of, this is a day that would definitely feel a little discouraging, and you could easily feel a little defeated, like, wow, just like that, it's 9:42 and I'm down 15,000 bucks. How did I just get caught in such a nasty rejection? But let's go back and say, are there some red flags that maybe could have kept me out of that trade? First opening candle of the day, a big doji. It's an easy to borrow stock. The float on this one is 36 million shares. It's higher float, easy to borrow. Did it make some nice moves pre-market? Yes, it certainly did. Very nice. But then choppy at the open. Curls up here, dips down. And, you know, the proper entry was 14.50, and I missed it. And then I chased it. And adding it for the break of 15 is a whole dollar break. But given the fact that this stock had already done this and was not at high of day, there was a little bit more risk in that. But yeah, this just happened to be one that just went the wrong way real quick. And that's where you now have that panic. And sometimes I hate to sell into that panic at the bottom of a candle like that. Let's see how it plays out. I sold at 48. So it goes 10 cents lower. The volume weight average price is actually 13.32. So now it's 10 cents higher than my exit. Now it's back, well, 4 cents higher. And this now looks like a bear flag. A sell-off, a drop, sideways consolidation, right? Then that's the bear flag. Now, it may not resolve to the downside, but if it breaks volume weight average price of 13.33, that certainly wouldn't be good. Seems like it's holding here relatively well, I guess, but honestly, if I was still holding this right now with 10,000 shares, I would be nervous. Because this is bear flagging. It's sold off and it's consolidating right above the lows. And that the psychological support of 13.50 does seem to be in play here, but if it broke that level, so there's those sell orders right there. And it looked like there's maybe a buyer at 13.51, 13.50. Right? So it's not breaking that psychological level. This is the battle that occurs very often around half dollars and whole dollars, both going up and coming back down. People are selling here, and we don't know if there's a short seller that's buying to cover or if there's someone buying who genuinely wants to go long, but it's not breaking 13.50. And the longer it consolidates here, if it does break, usually we get a bigger flush. And so, you know, that actually isn't the biggest flush on that break. But in any case, not a great start to the day on that particular trade, exemplifying certainly the risk of trading half dollars and whole dollars on stocks that maybe are not really A-quality setups. That was not an A-quality stock. That was not nearly as strong as GBR. And of course, at that price of, you know, in the teens, you have more risk as well. All right, so let's see. What do we have here? MDGS. All right, so looks like we're getting a first 1 minute candle to make a new high and then maybe an add through 5. This is the level 2 on it. It's kind of covered by my chart. So we're kind of, I'm dialing this in, and I would say 480 would be the spot we'd be watching, the break back over $4.80. And then we'd be looking for the break through 5. So first 1 minute candle would be 480. And then $5 could be an add spot. Orders at 503, bringing it down a little bit. Can't see the tape on it, so hard to tell, but you're seeing green here. So that is the tape for this one. So there's 85, 87. Okay, so now we're coming up. Now we're approaching the half dollar, the whole dollar, sorry. So we're approaching $5, and now I'm gonna see, can I add here in the 90s? Will this be strong enough right here that it surges through the half dollar or the whole dollar? Let's watch. Now, let's give a little context. MDGS is definitely a stock I'm familiar with. This is a lower float stock. MDGS float says 300,000 shares right now. Probably the result of a number of reverse splits, if I had to guess. The current price is $358 today, but yeah, we've definitely had some reverse splits on this one. So super low float stock. There's 5. There's 511. So I held. Now I put an order at 513. And look at this. So this is so typical of these ones. So let's back that up again. All right. So when we're looking at this stock, we already know, number one, it's a gapper. It's up 100%. The high a day, and my candle is, my cursor is on this candle. So the high is 1490. I know that some of these numbers are a little hard to read, but the high is 1490. That's right there. So that's the high of this current 5-minute candle, the last 5-minute candle, which would have been the high a day. So over 1490, we'll be hitting new highs. So we're looking for the break of 1490 for sure. But first 1-minute candle to make a new high is certainly worth a stab. If it breaks through 1490, we can see the halt level is 561. All right, so looking for green on the tape. Our tape is down here for the stock. So just seeing kind of churn right now. There's a little bit of green, 72, 73. There's a little bit of green, 74, 75. Okay, looking good. Starting to see some nice green printing there. There's 80, there's 85. There's 89. So I'm in at 77. Now, that was about, looks like 2 pennies below that candle. Sorry, I mean 490. Sorry about that. I'm in just a couple pennies below here at 477. So 477. I add there. Now looking for this break through the highs. There's 94. There's 98. There's 5 on the ask. We can see clearly looks like two 10,000 share orders. Gets bought up, goes to 507, another 10,000 share plus order. 515, another 10,000 share order. This would be a great time to throw an order out to take a little off the table. And I do. Put it at 513. So that is as the ask kind of comes back down. So orders at 513, we've got 503, 506. I didn't take any off the table maybe quickly enough. And now we're back at 93. So we broke the whole dollar, and now we're back below it. 88. I don't want to have to hit the bid, because if I hit the bid, I'm going to be getting slippage as it comes back down. So, but it looks like I did sell half at 88 just to say, well, that's $300. Take it off the table. If it comes back to break even, at least you'll have $400 to show for it. And I sell the rest here. This ends up being a false break through that whole dollar. It couldn't hold above it. And now I'm unwinding my position, as you can see. This is very typical, regardless of my share size, that I'll unwind positions by selling half and then selling another half, whether it's into strength or in this case, into weakness. All right, so let's back that one up here. And let's see, let me go like this and go like this, presenter view. Okay, so let's see. All right, so we got the first candle make a new high into half dollar, whole dollar break. Now let's look at KBSF. I know the stock symbol. This is a stock that was a former Momo stock. Well, that link doesn't appear to be valid. Bummer. All right, well, looks like I'm going to have to jump to the next one. Anyways, KBSF was a former momentum stock. Let me go and just make a note on that. What slide was that? Slide 719. 719. Okay, well, that happens. So here we go. All right, so let's watch this one. All right, so this is MTSL. Whoops, what's going on here? Okay, so MTSL, what do we have? Let's get oriented. So we're looking at MTSL, which is up 63%, 5.2 million shares of volume. Float on it as of today is 3.38 million shares. Has a high of day, it looks like, around 350, half dollar. It is not easy to borrow. It is on CB, which is short sale restriction. So it's not really easy to short, even if you could borrow shares. FFHL is easy to borrow, but this is hard to borrow L for locate and short sale restriction. 100% means I can't use any leverage on it, cash only. Now the trades will settle immediately, but I can't use leverage. All right, so let's watch this. Okay, so what do we have going for us here? So this 5-minute chart is not picture perfect. The first 5-minute candle made a new high right in there, right here, and then it came back down, right? It was right here, and then it came back down. That was at about 42. But if it can break back over 42, maybe we could get an early entry to anticipate the break of the half dollar. Now there's 43, 44, 45. And it looks like I just fumbled there a little bit. So I'm noticing a stack of sellers at 49, not a huge one, but a big one at 70. So I'm adding at 49. I can already tell you I'm a little bit skeptical about this. There's 47, 40. Okay, so look at this. We've got this big seller here, 90,000 shares. Well, I'm buying it up, 86,000 left. So 79,000, 71,000. So we're going to do our countdown. 71,000 on the ask. 68, 66, 65, 66, 61, 60. Let's go. 59, 57, 57, 56, 55, 52. And we're now someone dipped in and sold. So now we got to wait for it to come back up, still at 52, 51, 50. Again, depending on your data subscription, you may always see that even as the price moves down. You may see mine hides it because it's just showing the top of book. That's the data view that I'm looking at, but I don't mind it. So, because I just remember that it's still there. So now we're coming back up. So it's not going away and coming back. It's just, I'm seeing the top of the EdgeX book, which right now is 48. Now it's 50. So this is on EdgeX. Now it's at 47. So I'm seeing the top of the book. So the best happens in this case, there it is. So 48, 44, 41, 38, 31, 21, 18, 12. And I added right there. Now we've got 351 by 370. So what was initially kind of a bigger stack of sellers, now not so big. There's 60. 55. Not really a great breakout, to be honest. Now, considering I had 10,000 shares, that's definitely the kind where I'd say just I'm going to get out for a tiny win on it. It's just not breaking out all that much. It's kind of weird. 90,000 shares got bought at 50, but it's just not going that much higher. So kind of a little bit of a disappointing trade there on that one, I guess. All right. So this one, let's see. Is that what we just looked at? Yep. So that was the 60, 70,000 share seller. Now we've got a break on SNOA. Let's watch this one. This was also a bit of a former momentum stock. Okay, so SNOA here, 1450. Whoops, sorry about that. So it looks like I did a hotkey entry on it. It was very quick. It's 9:31, and this thing is just surging up. I haven't updated my chart yet. So it's up 168% on 2.8 million shares of volume. The float on SNOA as of today is 2 million shares. It's hitting our scanners there. So I'm in with a hotkey, shift 1, 1,000 shares at 1450. There's 70. There's 1475. Can we get this a little clearer? There we go. So punched it, hotkey, shift 1. Now remember in that example of that big loss, that hotkey got me in a little bit of trouble because I got filled at 66. But in this case, I filled right at 50. So in there at 50, but I could have easily filled here at 66 or 70 if I was just a second slower. There's 75. Now I could take half off, but this is only 1,000 share position, so I'm definitely just kind of getting started on it. There's 80, there's 90. Now I could add here for the break of 15, halt level 1547. So I could add right here. Let's see what I do. It's going to throw off my cost basis. 96. So in this case, I sold it. Now, if you get that 50-cent breakout from a $0.50 up to the next whole dollar, there's nothing wrong with taking that off the table and paying yourself. Now I can always get back in here for the breakthrough 15. Out at 92. This is looking like a good setup for a break of 15, but let's just see what it does. Orders at 1501 for 2,000 shares. So I was a little on the defense, paid myself, which was good. Now we're back at break even there versus that initial entry. Now at 39, I'd be red. Uh-oh, now at 14. I'm glad I took some off the table. It doesn't mean it's not still in play for a possible trade there. But, you know, in that case, it didn't hold up. Okay, so let's see. Oops. I'll just move this down here. Okay, so, and actually that was the last example for this chapter of half dollar, whole dollar. So as I said, there'll be more examples of that in the high-speed breakout trading chapter and in parabolic momentum trading section, because so many of those are around half dollars and whole dollars. Okay, so with that, we will continue on to Chapter 8, Setup 4, which is the micro pullback. All right, everyone, so we're going to continue here with Chapter 8, Setup 4 on the micro pullback. Now, it's a little sunnier here today, so the lighting, I'm going to be a little dark, but I compensate by wearing a really bright shirt. And, you know, funny enough, Uncle Steve got this for me, and he said he went to the Army-Navy surplus store, and they were giving these away. They used these camouflage uniforms back in the 70s when they were, you know, disco era. So they don't work so well as it turns out today. So you can get them real cheap. All right, so Chapter 8, the setup here we're going to talk about is the micro pullback. So micro pullbacks, this is definitely getting a little bit more advanced, and this is something that probably will not be the first strategy that you master. If I was going to guess, I would, again, say probably it's going to be the first pullback, the second pullback, which is, you know, a pullback setup, bull flag, then ABCD patterns, which are a little more complex, but usually pretty good. Maybe half dollar, whole dollars, you'll start to get early entries, and then micro pullbacks. Again, half dollars and whole dollars also being a little more advanced. Both half dollar and whole dollar breakouts and micro pullbacks are much stronger in a hot market. In a cold market, you want to be really careful trading this setup because you will get yourself into false breakouts left and right. So essentially what's happening is the stock squeezes up so quickly that it barely has time to pull back. So essentially it doesn't pull back as you would look at maybe your 1 minute chart. But in fact, if you zoom in a little closer, you would see that it does. And so, for instance, on CLPS right here, as this squeezed up, which, by the way, crushed today, $133,000 in 1 day. That's maybe a little inspiration for you. So CLPS goes from 5 all the way up to 14. Then it pulls back and it rips at the open up to about 20. So right here on the 5 minute chart, if you were a trader on the 5 minute chart, you would have said, well, there was no pullback here. I couldn't have possibly traded it. Maybe you could have bought it here into what turned out to be a false breakout. And maybe you could have bought this first pullback on the 5 minute, which was fine. And maybe you could have bought this, which is a break of the volume weighted average price, or this, which is a 5 minute pullback. But what about when they are ripping like that and you actually want to buy it? So then we can pull in the 1 minute chart here. And of course, during this 5 minute period, there were some 1 minute micro pullbacks, and this is one right here. Now, this is a very micro pullback in the sense that this candle hit a high of 969. The next one dipped down to 870 and then immediately surges up to over $12. So it pulls back just for a second. So we would call that a micro pullback. And that absolutely, for an active and aggressive trader, presents an opportunity to jump in it. These are quick trades, and so they're not necessarily beginner level trades, but once you start to get a little confidence, you'll start to be able to visualize those pullbacks even as they occur on the level 2. Because of course, as I'm watching the level 2 for one of these stocks, I'm seeing, oh, okay, we just hit a high, and I kind of mentally mark, well, what was the high of right here? I can already say the high is 1135, 1150. So if we all of a sudden drop down to 1078 and then surge right back up, I don't have to look at the chart to recognize that that presented a micro pullback. But the chart does help us visualize what potentially is the right entry, which is the first candle to make a new high. And then we could even dial it in further if we really wanted to and look at the 10-second chart for those of you that do have access to 10-second charts. And here, now the 10-second chart again is in the context of being inside a 1 minute chart. And so this was our pullback that was at 869. But it looks like even before that, There was a little bit of an entry right around here at 850. Micro kind of pullback right under the $0.50. Even looks like there was another one right about here. And maybe a small one right there. And if we continue higher up, you'll see that there was another one right here. Another micro pullback right there and another one right here. And that was while this just kept kind of going higher and higher on the 1 minute chart. So these varying forms of micro pullback, this is the one that I just showed you right here. And let me get my drawing tool here. Let me load this up. All right, so activate. Okay, so this right here is when you actually have a small red candle. Now this could be something you would see on the 5 minute chart. It could be something you see on the 1 minute. It could be something you see on the 10-second chart. But that's the pattern. Candle up, a sort of blip, small little red candle, and then it continues. Now this would be even more aggressive because here it pops up, it pulls down, inside this candle it dips down, and then it surges right back up. So to visualize something like that, you would really, to actually see that and catch that dip, you would really have to be watching the level 2. And then this would be a momentary pause, and this would be typically around a $0.50 or a whole dollar where it taps it, and then just for a second kind of hesitates, and then surges through. And it probably would have been hesitating because there was a big seller on the level 2 in that instance. So this is a setup that you certainly can't trade without time and sales in level 2. You could trade it on a 5 minute chart, but then it's not really a micro pullback on the 5 minute chart. You know, this on a 5 minute chart is just kind of a very small bull flag. So primarily we're looking at these on the 1 minute and maybe even a 10-second chart or something like that. So let me read this slide for you, and I'll just put it up on like this. And I'm going to read it. So the entry can be within the 1 minute candle. So as the stock is surging up, then it dips down. We buy that dip, or we wait for it to curl back up, and as it breaks back over a $0.50 or a whole dollar, that can be the long. It's an aggressive entry. It should be reserved for stocks that have already proven they are very strong. In other words, probably a stock that's parabolic, like CLPS was. Some of the best micro pullbacks are the first 1 minute candle to make a new high. They're in the context of either the first pullback after a fresh 5 minute breakout. So we get a fresh 5 minute breakout and then a 1 minute micro pullback before continuing. But other times they're directly after the open or directly following breaking news. So when you have a stock, and we had this yesterday on CCIV, that had breaking news come out, and we could just look at the 10-second chart on this. When you have breaking news come out, typically the high frequency trading algorithms jump on that and you get that immediate spike. So you get the immediate spike, and then it might hesitate for a moment. And during that hesitation, that's when we're getting our micro pullback. So I'm just looking at this on a short time frame, because when you have that algo high frequency spike, it's so quick, it sometimes just goes right into a halt. So that's essentially what happened right here. So this went into a halt within 20 seconds. 10, 20 seconds, it's into a halt. 10, 20 seconds from the press release, hitting the news wire. It just goes straight into a halt. So those are, I mean, that's a response time that you can't even compete with. You can see that this kind of did a little micro pullback at 45, and then it opens, and it actually dipped, and then this technically was a micro pullback as it broke over 50. And then this was technically almost a micro pullback, but then it went into a halt. So in fact, this one didn't really have the best micro pullbacks, but often the times we'd be looking for that would be when a stock has just started to open up because of breaking news, or in the case of a pre-market stock like CLPS, the news was out, but then as more and more traders log in and it starts to make its way up the gap scanner, you'll see that volume increasing. All right, so let's see. So this is a hot market type of setup, but ultimately if a stock has just squeezed up 10 to 20% in the last 5 or 10 minutes and it's near halt levels, micro pullbacks will draw in new traders and stop out early short sellers. It dips for a second, maybe a moment of relief for a short seller or a moment of opportunity for a long trader, and then it keeps going. So if the stock has a lower float, the market is hot, and the market is hot, this is a setup that will work even better. If the stock is only up 5 to 10 cents and is a higher float, I wouldn't even consider a micro pullback setup. So this, you know, we may at times trade stocks that are slightly higher float, 50, 60, 70 million shares, maybe 100 million or even higher. I'm rarely, almost never, even if those are moving quickly, going to do a micro pullback on them. I'm going to want the confirmation of really clean charts, a clean pullback, a clean ABCD pattern. So in order to feel the confidence to press the buy button on a micro pullback on a stock that's already extended, I need to see green buyers on the tape. I need to see those green orders going through on the tape because those signify to me that other traders are stepping up to buy, either to go long or to cover a short position. And either way is buying, which is good. If there is low volume during the micro pullback, so it pops up and then it just kind of stalls out, volume sort of just stops, or we see a lot of red, then I'm going to wait because this may not be a micro, this may be the beginning of a true pullback. It might look micro right now, but it's just pulling back. So really, for me, the entry is it pops up, it pulls back, and then I'm waiting for that volume to come in, the green on the tape, to indicate that people are stepping up. And that tells me that people are not waiting. Either short sellers are scared and they're just like, I got to get out, or long traders are not waiting. FOMO is hotter or higher in this market, and so then I'm going to go ahead and jump in. But if it starts to pull back, we only see red, volume is declining, then it's still pulling back. And maybe at that point, we start switching our focus from micro pullback to waiting for the first proper 1 minute pullback. Alternatively, if I see a really big seller, such as 25,000, 30,000, 100,000 shares, I may watch for that seller to thin out a little bit, 19, 15, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, before pressing that buy button. As the seller thins out, green orders will be going through the tape as people buy up that seller's shares. Now, if I'm feeling aggressive and confident in the stock due to the daily setup, the market sentiment, the specific stock characteristics, and my own P&L on the day, I may start buying more aggressively. So today on CLPS, on dips, I was being pretty aggressive on that. Of course, yesterday we saw that big move on SCKT. I ended up having a great day, up, I think it was 43,000 on that stock or something like that. And so, given the fact that yesterday was a good day and CLPS looked similar in sort of a technical way, I thought, well, if SCKT did that yesterday, and traders, of course, are, that's our recent kind of memory, that chart is going to be kind of applied to this stock because they're so similar in price. So we may want to set higher expectations, and for that reason, I may want to be a little more aggressive. So this was the right time to be aggressive. But on a day where, the market is colder and I didn't have a profit cushion yet, then I probably wouldn't have been so aggressive. So the target, it's a retest of high a day and potentially a squeeze into a halt. The idea in this setup is to be potentially entering a stock that is about to become parabolic or that is parabolic and to continue to ride that momentum higher. Using the first sort of high-risk trades to build a profit cushion on the stock and then wait for a pullback or a dip entry for my next big position. So usually a micro pullback in terms of position sizing isn't going to be my full-size position. I'm not usually going to jump in 20, 30,000 shares, 50,000 shares on a micro pullback. I might do 4,000 to 8,000, maybe to 12,000, maybe to 16, maybe to 20 if I already am up quite a bit. But usually I'm going to be a little bit more conservative because when I look back on the chart, if it ends up being a loser, I'd look back and I'd say, wait, so I just got in at the middle of this huge green candle. That was an extended entry, and it's one thing to buy an extended entry when the market is hot, but it's not always a good idea to take that type of trade with full size. So the risk factor is this is an aggressive entry. False breakouts are not uncommon. You don't really have a lot of confirmation for the trade other than maybe the first candle kind of making a new high on a very micro time frame, whether it's a 10-second or even a 1 minute, but it's so tight that it hasn't really formed enough of a setup that probably it's going to attract the interest of a lot of other traders out there. This risk is higher if the volume is light because a sudden flush could drop the stock right back down and could result in a much larger loss or a lot of slippage with large share size. That's especially true pre-market. The stop loss can be the low of the last 1 minute candle or an arbitrary 10-20 cent stop depending on the spreads and what you would expect would be kind of the slippage you might anticipate. Profit target anywhere from 10, 20, 40 cents, but maybe higher if it's a higher price stock. This is probably the most common setup for parabolic stocks, buying micro pullbacks around $0.50, whole dollars. It's as the stock breaks out on the first 5 minute candle to make a new high, a 1 minute micro pullback as it rips higher. And then even as it's forming the first sort of 1 minute breakout, you can have a 10-second micro pullback inside that 1 minute chart. So that's where we start to really see these pick up. And again, it requires watching the level 2 pretty closely. Oftentimes they're moving so quickly that they don't pull back for more than just a few seconds or maybe a few minutes before surging back up. So these are times where if you were saying, well, I'm a beginner trader, so I want to focus more on 5 minute pullbacks because, those are usually a little bit more predictable. They're a little bit safer. Well, the problem is on a lot of these stocks, by the time you get that 5 minute pullback, It's already gone up 300%, 400%. Now it just fades off the high. Because even on a 5 minute, it's too extended to take an entry here. So in those cases, 1 minute micro pullbacks are often our best entries. So I'll move my video up here for you. So this is an example of a 1 minute micro pullback right here at 449. It also coincides with the $0.50, and you've seen this example before. So that's a little micro pullback. It just hit the $0.50 just for a second, pulled back, and then continued. Now, Miles, your question there, would I trade this with a small account? So the answer is that yes, I personally would, but I'm not a beginner trader at this point. So it's hard for me to say, if I was a beginner trader, would I trade this with a small account? If I was a beginner trader, I would, I'd probably focus, I might take a 1 minute micro pullback like this because it does have more of a 1 minute look to it. I might be more cautious about doing the 10-second ones. Ultimately, you wouldn't want to be trading any of these type of micro pullbacks until you'd proven you were trading them well and profitably in a simulator. And so if you are, then that's what's giving you the confidence, more so than me saying I would or I wouldn't. I think if you have the confidence, then you certainly should. And if you don't have the confidence in them yet, then you should keep practicing. But if that goal is to make 10 cents, 20 cents a day, to start building up the account, then ultimately you want to trade less and you want to focus on the highest quality setups. So a micro pullback like this on a stock that's clearly strong, and if this was the strongest stock on the market on that day, then that might have presented you with the best opportunity. And I think that would be probably fine. But some of the more aggressive micro pullbacks that don't even look like a pullback, it just tapped that level, dipped for a fraction of a second, and then continued higher, that might be too aggressive. So here's another one, Pran. Now this one would have probably been pretty aggressive because the volume is so light. So you can see here, very light volume. It squeezes up, it dips to 316, and then it surges higher, up to 391. This right here is not a 1 minute pullback, and I'll just draw this for you. So this right here is not a 1 minute pullback, but this right here is. So I would have probably said that this would be too aggressive for a sort of small account beginner trader. Letting it squeeze up and then form that first proper pullback probably would have been safer. And then once it proved the strength of actually doing a nice pullback like what it did right here, then perhaps taking this would have been okay if you had a little bit of a cushion. Perhaps. But now this is the second pullback up here. Usually we want to be focusing primarily on the first and the second, not the third, sorry, it's the third pullback up there. So once we get into the third and fourth pullbacks, that's when risk starts to increase. So this is a micro pullback before a 50% squeeze from 316 up to 460, which, ultimately is, that's impressive. That's certainly something that we like to see. Let's see. Now let me just want to see what slide that's on. So that's 720. I just want to get this up here so I can see. And we're going to have some live examples on this one, in this section. Let's see, we've got 3 live examples that we'll go over. Okay, so here on this lighter volume, as you can see again, kind of increasing, surges up, it dips down, and then it rips through the high, which also happens to be the $0.50 of 350. So it breaks through that level, it surges up to 4, hits that level, pulls back, and does pop higher to 410 before reversing. You can tell that this is a lower volume stock just based on looking at the volume bars here, and then kind of all of a sudden volume picks up, but then you've got this high volume red candle. So this, for the break of the 350 spot, is certainly a fine micro pullback. Whether or not this would have been a good trade for a small account, that I'm not really sure about. Here's another micro pullback before a 30% squeeze. So that was right here. Just a brief little micro pullback. So you can see how on the 1 minute chart, it surges up, pulls back just for a second, and then it continues higher. So that would have been your first safe kind of dip entry, your first safe kind of spot to look for a pullback entry. Barely noticeable, but it was there. Now, this is the next spot right here, and that would have been okay. First candle to make a new high, and it comes back up and hits the high of 1350 and then has resistance. So that would have been fine. You could have taken that trade as well. In this case, we have APOP. This is actually on a 15-second chart. So I actually have to update that. So this is a 15-second chart. So it's a close-up view, but you can see it surges up to 10, micro pullback, and then goes higher. Goes up to 11, sort of hesitates for a second, surges up here to 12. High there of 12.25, that's a micro pullback then for a long over 12.25, and that's a little dip there possibly for another trade. So as we look at this, knowing that this is a 15-second chart, you could use 15, 30, whatever it is, it just kind of breaks down those 1-minute candles so you can see them a little bit better. And yeah, you can certainly see how that was a little dip, moment of hesitation underneath 10 bucks. A little bit here, but not anything that was probably logical for a trade. Maybe a small one here, but then it stalls out, dips down, but then comes back up. You'd be able to visualize these better when you're watching them in combination with the level 2. This is a 1-minute chart, and this was actually a pretty interesting one because this stock squeezes from 27 up to 35 at halts. Then it goes up to 45, 47, drops down. First 1-minute candle to make a new high, comes back up, double tops, resistance, drops back down, halts going down, looks like it might be a short. That became a bear trap, and then it opens and immediately surges right back to 47 and halts going up. And then it surges all the way to 62. So that's where it really started to pick up. You know, all of a sudden it really ripped right there. And so that's what we would have been looking at. And this actually went as high here as $110. Actually, it went even higher than that. It went to like, I think 140 or something like that. But that was a huge move. Let's see, and I see you mentioning that PETZ is halted. So let me look at that chart here. So this is kind of similar to what we were looking at yesterday. This wouldn't right now be a micro pullback, although it's possible that, so a halt resumption can provide micro pullbacks. The halt time was 11:28 and 21 seconds, so resumption will be in about 1 minute. And remember we had drawn this level here at 13:30, which sort of like what we had yesterday on SCKT at 12:45, I thought is kind of a pivot. Now it's hit once, but if it breaks that level, then the target's 14:10. So perhaps, and this has a pre-market high up around 19, so it does have some room to continue squeezing. So perhaps we squeeze in here on the resumption, just a little analysis of a micro pullback. We've got the 10-second chart, as you can see right here. The daily chart I can hide. We're not going to be looking at that right now. So I might do 1,500 shares, be a little bit more conservative on this. So put the order at 1350, like that. This stock we can ignore. I'll just go like that, so it just blanks it out. So yeah, that was GLSI, that other one. So resumption on this is going to be in about 10 seconds if it's a 5-minute long halt. So I'm going to put the order, I'm going to move it just a little higher, showing a 1320 resumption. Watching. So quick long there. That was just a momentary dip. So now this is a dip right here for the long. So I just bought that dip for the breakthrough 14. And I'm all out. Boom, just like that. That's what we call a micro pullback. Hey, live trading. Made $5,000 on that. Thank you so much, PETZ. So this is now halting going up. Those were micro pullbacks. Did you see how fast that was? How fast can you be? Are you willing to be aggressive? Watch here. Watching. Looking for an add now over 1450. Halt levels moved up. Added right there at 38. So I've got 4,500 shares. This is a dip, as you can see right here. This is actually the beginning of a 1-minute chart. Now let's see what it does. The high is 1452. A nice breakout initially. Ooh, not liking that. So you know what? On this one, I'm not going to add on that. I'm just gonna have to take the loss. But I'll watch it on resumption, and we'll see if it bounces higher. So it opened at 1255, and I was a little aggressive on that because I had a profit cushion. I kind of thought, you know, I'll go for the entry, which was at 1435, to anticipate the break right through the $0.50. And you know what I didn't really wait for? I didn't wait for the green on the tape. I just kind of jumped right in. So it sort of surged, it popped, it started dipping, and I didn't really wait for the green. Now, again, that's a situation where I'm going to be a little more aggressive when I have a cushion. Certainly have a cushion on the day, no doubt about that. But in any case, so we'll see how that resolves. I'm probably going to give back a little bit of profit on it, but it's fine. In any case, it was a good micro pullback and a good reminder, easy come, easy go, certainly in this market. All right, so I'll just put that over there. So sitting at 137,000 right now, but holding 4,500 shares at $14. So we'll see where it resumes. Okay, so let's go back over here. So on this one right here, this squeezes up here, and then right in there as it starts to break out, right there, we get that micro pullback. Kind of a micro pullback, and then it pops higher. And this again is on, as you can see, the 1-minute chart. So just that little micro pullback, and then it continues. This was the first pullback after this 5-minute breakout. Now on Pixie, we have this one here. These are more proper 1-minute pullbacks because you have 2 candles at least. I would say when you have 2 candles, it's a nice pullback. You know, it's not quite the perfect pullback, but it's not, you know, it could be a little bit longer, but it's fine. So I wouldn't really say that's necessarily a micro pullback. It surges up, and then right in here, it pops over the volume weighted average price, pulls back, and that is a quick micro pullback right above VWAP. And then that right there is a micro pullback. Well, actually, that's more of a regular one. And then this is kind of a micro pullback right in here. And sometimes as they become longer pullbacks, they do start to just look more like a regular pullback and not really a micro pullback. And so they can, you know, they can kind of shift from one to the other. All right, so let's see. So we've got a live example here. Now I got to keep half an eye on resumption. So PETC halted at 34.27, so resumption will be 39.27. So we still have a couple minutes. All right, so let's see. All right, so OBLN. Let me move my video to the bottom corner there. So this is, let's see. So this is a lower price stock that pops up, and it's popping up right now. So you can see it squeezing up here to 120, 117, 120. It's hesitating here. And so in that hesitation, and then you see the green, that kind of forms a quick little micro pullback. I mean, a quick micro pullback. So we get that sort of hesitation right at 120. So we came up to this level, which on a cheaper stock, we sometimes see resistance, not just at the half dollars and whole dollars, but even quarters and sometimes even every 5-10 cents. So right here, there we go. So I get the long, my orders are at 22, 2 orders filled at 20, one's at 22. There's up to 28 in the halt. And you know, this is a price range where they halt fast. So those fast halts certainly do sometimes mess up the price action a little bit because you're like, man, this thing it's halting so quick. It's not really giving me a good chance to add or get a big winner on it. So that was a squeeze into the halt. So let's see. And then we're going to look for resumption here on this. Okay, so watching resumption. So it dips now. The new long is 140. The high is 140. Seeing green right here? There we go. So I add there for the break of 140. There's 145. I want to take a little off the table into this breakout. All right, so you've got 150 now, psychological resistance at the half dollar. So that's kind of the next spot that we're watching. Moving the order up to 150. Now this is starting to form a proper 1-minute pullback. Not quite, but you know, it's moving in that direction. All right, now let me pause this for a second. I've got to manage my, my loser over here on PETZ. So hang on one second. So resumption is going to be about 27 seconds. Let's get our chart back up, or in about 7 seconds. So we're showing 12:55. So can I do a dip? Let's see if we get that pop back up to 13. So, you know, a setup like this, man, this thing is definitely on the weaker side. So I cut the loss on it. It is what it is. All right, so let's switch gear. Let's just focus back on this. All right, so anyways, and I guess, again, like I said, now it's halted again, coming down. This is the sort of irrational strength that we've been seeing. Irrational strength and then irrational weakness. I could certainly buy the dip on it, but, you know, I don't really want to get into over trading it. The real idea here was to watch those micro pullbacks, which actually we could even go down to like a 1-second chart here. So this was where I bought right there. And I thought it was, that's where I thought we were going to get the break back over, and I was wrong. But this entry down here, that one was solid. So we got the little dip there, and that one worked. So this was just a little, I don't think I waited for the volume confirmation. You can see the volume on these candles here is lighter. I didn't wait for that surge of green, which is, I mean, it's important. Again, though, when you have a cushion, sometimes you might feel you can be aggressive and just jump in and not wait for it. But anyway, so OBLN, 136, there's 140, 144. Here we go, break of the half dollar. So right there, I took profit off at the half dollar. New order, looks like it's at 30. Maybe I'm looking to do a dip trade on this. Let's see. No, it looks like that was the end of the trade. All right, so let's look at got another example here. So that was a micro pullback, then into a halt. Yep. So now this is another one. Copy link, paste. Okay. So what do we have here? A quick micro pullback. So this is the stock WAFU. It has just broken over the volume weighted average price here. And it looks like the high is around 10.05 or 10.15. Orders at 10.30 right there. So we see this is our kind of 1 minute micro pullback. We break the volume weighted average price. And you know, at this point, hey, that's not bad. That's not bad at all. But you know, it is a bit of micro pullback, and it's not a bad time to take a little off the table into that squeeze. But it also, you know, kind of became a proper 1 minute pullback because of that red candle. That's nice resolution. That's really nice. And yeah, I just showed you just to answer that question, I just showed you the 1 second chart on PETZ just because I wanted to show you the sort of breakdown, because even the 10-second chart on that didn't exactly show what I was looking at because it was so quick. That just happened to be a really fast one. So, but easy come, easy go, certainly on that stock. All right, so let's see. So the high there, so let's back that up. So I did another little dip trade. Let's back this up here. Where's this next dip trade? All right, so I was in at 10.13, and then where did I add? Hold on, I gotta back this up. All right, let's go back to the beginning. Okay, so we've just broken through the volume weighted average price. Now we're doing a little pullback. First candle to make a new high is 10.15, so start buying when I see the green on the tape. The green confirmation right there. Look at that. So I buy, and then what do? Into that breakout, I want to take a little off the table. So I want to take a little off the table and pay myself, because you know what? I was right. It went from 10.14 to 10.50. Now maybe it does go all the way to 12, maybe not, but that's certainly a nice move. All right, so now the high is 10.60. Moving my new order up. I'm going to move my order up to 10.95, hands on the buy button. Over 10.60 is a possible long. Watch here. Now, I actually jumped in there for the break back over $0.50 psychological resistance, because I'm thinking if it breaks back over the $0.50, then we're going to go right to 60. So I'm in a little high at 51, 55, and 53. There we go, immediately through 60. Spread 60 by 82. So we've got a 22-cent spread. I could put an order on the ask to take a little out. I can glance at my cost basis, which is 42 with 6,000 shares. There we go, there's 11. And I went ahead and added at 80 and 83. So the high there was in the 70s. I added a little bit more, 2,000 shares, not big size. Now taking a little off the table, offsetting right there. There's 11.20 on the ask. Not filling. See how those orders are kind of not filling super well? And then it drops back down. Holding 1,400 shares now at 10.42. That's a nice move. Target on something like this starts to become high of day. So, you know, will we get that squeeze back to the highs, which is 12? So I'm all out right now, and I just added back. So let's go back and look at that. So this starts to get into the high-speed trading, which we're going to talk about in Chapter 11, which is doing those aggressive breakouts. I don't want to get too far into this. I will try to stay focused mostly on micro pullbacks. So what's the micro pullback here? The high is 20. It dips for a second. I would say this long here is actually a dip trade off of 11. So this is just this is like a 20, well, no, it's actually only 3 minute long. It's a 3 minute long video. It includes a dip trade. It also includes this micro pullback. So this right here is a dip trade. Stop is 10.99. So I want to see it hold 11, 4,500 shares. Now the high looked like it was in the 11.20s, and it looks like I sold that break even at 11. So now I kind of open up the chart a little bit. High was actually 11.44. All right, so it was a little bit higher. High of that candle, I checked the high of that candle, 12.40 or whatever it was. Are we going to form a 1 minute pullback right here, a micro pullback? Now watch this, because the high is 11.44. So we're getting pretty close. Orders at 11.66, hands on the buy button. Again, I'm buying the dip. Stop is 11. This is a dip entry. And what I'm expecting, there you go. So that when you see something like that, that's when I certainly feel like I'm firing on all cylinders. I get the dip entry, and then I get that. I mean, come on. That's awesome. That's a really nice trade. So let's back that up for just a second. So the initial entry on this was not a micro pullback. The initial entry in this case was actually a dip trade, which we'll talk about in Chapter 8. It's its own section. So this was a dip trade with a stop just under the psychological support of 11. So dip trade, and now I'm adding, this is the micro pullback long. The micro pullback long is the break through the high. As you can see, these two candles, high, pullback, micro pullback is the break through that level. So the proper long for a micro pullback is 1144. And so into that second setup, I'm adding. So sometimes my best trades will begin as a dip trade, and then they turn into an add for the break of the $0.50. And then they turn in maybe to an add for the first 1 minute candle to make a new high. And so I could add to each of those levels if I'm still feeling confident, and potentially that's when I start to see some really nice trades. Okay, so it breaks through this level. So now you have a couple things going here. You've got people buying this who bought the 1 minute micro pullback. You have people who stopped out on the short side on the break of 1144. You have people that bought the break of the $0.50, 1150. And you have people like me that are in maybe from this last pullback here, or that bought the dip off of 11. Target, logically, is up here around 12. What's going on? Let's see. There we go. Okay. So now let's watch this. There's 70. There's 90. And I took it off the table. I sold the whole thing at 1181. I would guess that was a mistake by pressing the wrong hotkey. I would have typically wanted to sell half there, not the whole thing. So I accidentally, I think, sold the whole thing. Green, but not exactly what I planned. Now, risk, double top. So caution flag, we've got double top here at 39. So some people would even just start shorting this right at 1239 because it's a double top. Now, if it goes 1252 and halts, all of a sudden, they just shorted into a strong stock. Oh, and it looks like we've actually got room to 1545. So maybe, I don't know, but that looks now a bit like a pivot, right? Kind of similar to what we had on PETZ, similar to what we had on SCKT. And, you know, the pivot on PETZ, although I lost on that trade, the pivot was still good. It just was that I should have taken everything off the table instead of adding back where I added back. All right, so halted now at 1252 and resumption showing 1275. All right, but that's the end of that video. So I'm just gonna make a note to myself here on this. Oops, that was WAFU, to make sure that's also added in the dip trades, so we can go back and show that. So dip trade also. All right, so false breakout on a micro pullback, but still profitable due to a quick exit. All right, let's see what this one has for us. And I think, as I mentioned, again, there's a lot of overlap with some of these examples. Some are a dip trade, and then they're micro pullback, their first 1 minute candle to make a new high. So Raj, to answer your question there, why I sold the whole thing. So usually, why would I usually sell half? I would usually sell half because usually I want to keep some keep some skin in the game for the bigger move. I don't mind selling half and selling another half as it continues higher, but to just sell the whole thing into that spike when it hasn't even broken that kind of critical level or double topped yet, that's just selling a little too early. All right, so here on CLSN, look at this. We have a pullback happening right now at 350, which is the $0.50. This is a micro pullback. I just bought right there at 46. I see a seller at 49, and I'll probably add there. See, it goes, see the countdown? It's a very quick countdown. 16, 14, 12, 11, right to 50, surges through. There's 52. I put an order out at 51. This is a stock. It's only up 15%. And it looks like I got filled at 51. So on that one, this was a micro pullback, but kind of a false breakout. It didn't really give us that big move. And I think it was the right move to take that off the table. All right, so when we get into the section on parabolic stocks, and certainly when we're talking about high-speed breakout trading, we're going to see some more examples. So let's continue on here to the next section on in Chapter 8, which is long setup 5, buying a break just simply through high of day, the high of day breakout.